Do you know the exact value of your super? Well, the financial capability website managed by ASIC says only 35% of us do. Do you understand the concept of diversified investments? Only 40% do. And how many of us pay our credit card balance in full every month? Just 59%. It means many people are missing out on growing their wealth. So, what do you need to know? The Banking Royal Commission highlighted the need for consumers to take greater ownership of their money.
They're going to either get proactively involved in their own finances or find someone they can trust.
Being proactively involved means arming yourself with knowledge. So, here are the top 5 things you need to know about money and building wealth. Save and wipe debt.
So we always say pay yourself first. The day after your salary comes in, whether it's automatically or you do it yourself, have an amount that you won't miss deducted, and so that gets you into a disciplined regular savings plan.
And pay off your credit card in full.
The minimum really is usually only about 2%. So you're just really covering the interest. And therefore, for the average person, that's going to be about 15 to 20 years before you pay that credit card off.
Understand compounding, where small amounts of money reinvested can grow.
For instance, $1,000 invested at 10% over 50 years turns into $117,000.
We call it get rich slow. Anything that's done over a short amount of time is usually risky and usually not successful.
In a low interest rate environment though, understanding investment classes and diversification is important.
Like shares, whether it's international or Australian shares, bonds, fixed interest, property.
Understand superannuation.
A lot of people simply don't know where their super money is. The simple thing is to find out where it is, to roll all your super accounts.
You can do that on the MyGov website. Learn how to track and manage your fund online and consider making extra contributions.
Makes an enormous amount of difference to how early you'll be empowered to do what you want rather than to work.
Avoid financial vanity.
The amount of money wasted trying to look successful, big houses, big cars, anything consumed on debt is a killer.
And negotiate.
Which is negotiating better with the banks, utility companies, putting pressure on your employer for a salary rise and putting that money to work for you in the longer term rather than spending it in the short term.
If you don't ask, you don't know and you won't get.